This is Nightly Business Report with Sue Herrera and Bill Griffin.
Data disconnect. New economic reports show strength while others show weakness, and that is making it difficult to figure out whether a recession is up ahead. Putting patients before profits. Lawmakers say drug companies are failing to do that, prompting big pharma CEOs to defend their practices. Major expansion. Jeep sales are red hot, and now Fiat Chrysler is making a big investment in Detroit. Those stories and more tonight on Nightly Business Report for Tuesday, February 26th. Good evening, everyone, and welcome. Bill Griffith is off tonight. It was a busy Tuesday that saw the Fed chairman on Capitol Hill. Drug CEOs were there, too. And the president arrived in Hanoi for an historic summit. But we begin tonight with the economy and the questions swirling around where it's headed. Today, a number of reports painted a somewhat confusing picture. Consumer confidence rebounded in February, and building permits, a sign of things to come, were higher. That's the good news. But housing starts, a report delayed because of the shutdown, tumbled to their lowest level in more than 2 years. Home prices decelerated in December, according to the Case-Shiller Home Price Index. And then Home Depot reported earnings that missed expectations, and that sent the stock lower in trading today. Courtney Reagan takes a closer look at the Dow Components numbers and what they may be saying about housing and the economy.
Home Depot just finished its best year ever, but the home improvement retailer's final quarter disappointed. CEO Craig Menear says unfavorable weather, cold, snowy, and particularly wet conditions is the reason for the lower than expected sales. When it's wet outside, home improvement projects get delayed. The categories that are less weather dependent performed better.
Home Depot is a great company. In the last 5 years, they've powered through weather. And so when you see a company now that's missing and they're starting to call out weather and rain, frankly, I think is probably the first that's been called out in quite some time. To me, that does seem to express some weakness in the underlying trends.
U.S. comparable sales increased more than 3.5%, and the number of transactions and the amount each shopper spent both grew in the quarter. Sales to professionals, like contractors, continue to outpace sales to do-it-yourselfers. Home Depot's online sales grew nearly 23% in the quarter, and now half of online purchases are picked up in stores. The strength of the U.S. housing market remains the key driver of home improvement spending. Chief Financial Officer Carol Tomei says most housing metrics are trending positive, noting that home equity has more than doubled since 2011 in the U.S., and more than half of U.S. homes are more than 40 years old, requiring improvements, a bullish indicator for Home Depot. Altogether, Home Depot executives classify the U.S. housing market as stable and forecast comparable sales to grow 5% this year.
There's so much concern out there right now with what we've seen, weaker housing data, maybe a weaker consumer. I don't see that in these Home Depot's results.
They're probably the best retailer in the country and one of the best operators in general. To me, it's very clear. It's just signs of the housing market are starting to slow.
Analysts agree that Home Depot is a well-run retailer, but if the housing market starts to weaken, even the strong home improvement players will get hurt. For Nightly Business Report, I'm Courtney Reagan.
The chairman of the Federal Reserve, Jerome Powell, addressed some of the conflicting economic data when he delivered his semi-annual testimony on the economy. And he told lawmakers that the central bank is prepared to stay the course. Our Steve Leisman has more.
Fed Chairman Jerome Powell on day one of his congressional testimony offering a mild outlook on monetary policy and interest rate hikes. He didn't close the door on another rate hike this year, but he emphasized the Fed will wait and see.
The committee has decided that with our policy rate in the range of neutral, with muted inflation pressures and with some of the downside risks that we've talked about, this is a good time to be patient and watch and wait and see how the situation evolves.
If it sounds like he said that before, it's because he had. Powell stuck very closely to the words from the January Fed meeting and his press conference. The Fed at that meeting pivoted from a policy of gradually increasing rates to one of patience. Powell offered an optimistic view on the U.S. economy this year, but said headwinds, both foreign and domestic, had clouded the outlook. And Powell suggested he didn't see a threat from the economy running out of workers.
There's more slack in the labor market because people are coming back in. If people weren't coming back in, then the unemployment rate would be substantially lower, but they are, or they're staying in. So labor force participation is rising in either case, and that tells us that there is more room to grow, and that certainly has implications for monetary policy.
Day 2 of Powell's testimony is tomorrow in front of the House. That could be a more contentious hearing with several new committee members. Investors will get a chance to see just how much support the new House members have for the Fed's new policy of patience, or whether they have another policy in mind. For Nightly Business Report, I'm Steve Leisman.
A number of economists and business surveys say that the odds of a recession are rising and that it could happen later this year or next. But a couple of hedge fund managers today said that's not necessarily the case.
Everybody's worried about a recession. I don't think that's happening at all. I do think you're going to have slower growth. And what that means is, at least for most people, you're going to feel that. It's not going to feel as if things were as good as they were last year. It's just going to be slower.
The conditions that would normally lead to a big market decline just don't seem to be present. What are the conditions that lead to a big market decline? Number one is the stock market smells an oncoming recession. Recession isn't in the cards. Economic slowdown, yes, but recession isn't in the cards.
So what do we know about the economy and where it might be headed? We're joined tonight by Patrick Chavanek. He's the chief strategist with Silvercrest Asset Management. Patrick, welcome back. Nice to see you again.
Good to see you, Sue.
It is confusing. I mean, housing is a perfect example. You get starts going one way, you get home sales going the other way. So net, how do you view the economy and the conflicting data?
So first off, it's important to remember that this has been a really sluggish and uneven recovery for its entire length, for 10 years. Mm-hmm. And, we were kind of spoiled a little bit by the summer where things really seemed to be cooking on all cylinders. But the economy's slowing, and the debate right now is how much is it slowing? And one of the problems right now is because of the government shutdown, a lot of the data is either missing or coming out late. And so we kind of have to fill in the blanks with speculation.
So does that mean, as an investor, you wait for another month to get a cleaner, if you will, number on things like home starts or, retail sales or the like?
So the frustration right now is, of course, that, when we'd like to have maximum visibility, we don't have all the visibility that we'd like. But we never have clear visibility. Mm-hmm. There's always, things can get better, things can get worse. And I would say, from an investor's point of view, that you never really want to be basing your investments in a way that if a month or 2 months of either really good numbers or really bad numbers come out, that would fundamentally change the way that you're investing. We're in the 10th year of a recovery. 75% of economists that were surveyed said that sometime over the next 3 years they expect a recession. So that at some point this cycle is going to end, and you really probably need to be prepared to cover the downside of that.
Do you take the Fed out of the equation now, because they have said, and the Fed chief repeated it today, that they will take a very patient and measured approach to any interest rate increases? Is the Fed less of a component now?
So one of the good pieces of news right now in the economy is that inflation has remained fairly low. And so the Fed isn't really under any pressure to raise rates. And that was one of the fears in the second half of last year that caused the market sell-off, that people were afraid that the Fed was going to raise rates and push the economy into recession. It sounds like the Fed intends to be patient and can afford to be patient.
You say good news will be good news and bad news will be bad news. I mean, is it as simple as that when you have such murkiness in some of these numbers?
Well, I said that because, sometimes in the past, when people were afraid that the Fed would raise rates, a bad economic number would come out and the market would actually go up because they'd say, oh, good, the Fed will ease, or the Fed won't rate hike. Well, now the Fed has said, we're not going to raise rates. And so that means that the economy kind of has to stand on its own.
Patrick, we'll leave it there. Thanks so much. Patrick Chavanek with Silvercrest Asset Management. Well, on Wall Street, stocks were lower in a choppy trading session as investors weighed Home Depot's results and the testimony from the Fed chief. The Dow Jones Industrial Average was down 33 points to 26,057. The Nasdaq fell 5, and the S&P 500 was off 2. Pharma stocks were expected to see some turbulence today as a number of high-profile CEOs testified in front of a Senate committee on the high price of prescription drugs. And while there was a lot of harsh questioning, there was little in the way of what to do about the issue. Elon Mui is covering the story for us tonight from Washington.
Everyone wants to know why prescription drugs cost so much, and lawmakers today came out swinging to get some answers.
Is the stock price more important than inventing that next miracle cure? Even if you buy the specious argument that a drug price's list price at launch is driven by research costs. What could justify arbitrary price increases year after year, long after the research and development spending is done?
The CEOs defended their pricing, pointing to the high cost of research and development, or what's known as R&D. Merck said it invested $10 billion in R&D last year, and it spent $1 billion on an Alzheimer's drug that never even made it to market. They also tried to shift the blame to the middlemen, the pharmacy benefit managers and the insurance companies. They say they're the real reason that consumers aren't seeing lower prices on drugs, and they urge lawmakers to pursue a holistic solution.
No one company can unilaterally lower list prices without running into financial and operating disadvantages that make it impossible to do that. But if we all bring the parties together around the table with the goal of doing what's best for the patient, I think we can come up with a system that works for all Americans.
This is just the beginning of the road here on Capitol Hill. Senator Chuck Grassley, the chairman of the committee that held the hearing, said he's not done just yet.
We're not going to accept finger pointing. I believe that we all know, though, that there's so many people in this process and there's so little transparency.
There is a lot of appetite for some sort of legislation on the Hill, but lawmakers still need to agree on what exactly it should look like. For Nightly Business Report, I'm Ilan Mui in Washington.
The FDA today outlined a number of measures to combat the opioid crisis. The measures include packaging the pills in small amounts, such as for a day or two following surgery, and reducing the dosage amounts. It is also calling for new steps to promote non-addictive pain medicines. The FDA has been criticized for not having done enough to stem the epidemic and for even enabling it by approving powerful painkillers for widespread use. It is time to take a look at some of today's upgrades and downgrades. Caterpillar was downgraded to sell from buy at UBS. The analyst cites concerns over slowing global construction demand. The price target is $125. The stock fell more than 2% to $137.98. Foot Locker was downgraded to hold from buy at Pivotal Research. The analyst cites tough comparisons in the coming quarters, along with the stock's valuation. The price target is $64. The shares fell 1.5% to $58.89. Still ahead, why Wall Street's attention is turning to Vietnam. President Trump and the head of North Korea arrived in Vietnam for an historic second summit. It is a geopolitical event that investors are watching for signs of an easing of nuclear tensions. Eamon Javers reports tonight from Hanoi.
It was about 65 hours of travel time for North Korean leader Kim Jong-un as he made his way here from Pyongyang by armored train. About 20 hours of travel time for President Trump on Air Force One. The two leaders set for their second face-to-face summit here in Hanoi, Vietnam. And among the questions experts are asking are, what possible agreements could these two leaders come to if they can't get to a full deal for denuclearization of North Korea, including removal of all sites and all potential weapons material? What are the smaller steps that the two leaders could agree to? One possibility is a formal end to the Korean War, which, as you remember, ended with an armistice back in 1953, but not a formal cessation of the war itself. So that is one document that could be signed here. The other possibility is the opening of liaison offices between the two countries as a step toward the normalization of relations between North Korea and the United States. So we'll watch for that. But of course, these are two freewheeling leaders who like to negotiate on the fly and maintain a lot of flexibility as they get together face to face. So just about everything is on the table at this historic second summit between these two leaders here in Hanoi, Vietnam. For Nightly Business Report, I'm Eamon Javers in Hanoi.
And there is also an interesting economic story unfolding in Vietnam. The country has become one of the surprise winners of the trade war between the U.S. and China. Eunice Yoon is also in Hanoi for us tonight.
Kim arrived in Hanoi today. He and President Trump are expected to first meet on Wednesday evening for a brief one-on-one and have dinner with their advisors. Then on Thursday, the two will have a series of meetings. Kim is very security conscious, and we don't know his exact movements, though he has met with Vietnamese officials and is widely expected to tour some industrial zones. I'm at a factory that makes and exports clothes to the United States, and the North Koreans have reportedly expressed interest in Vietnam as a possible model for their own economic development. Vietnam was an isolated, state-led command economy and transitioned successfully to an open economy. It managed to do that without political upheaval, and from what we know, Kim has feared that economic reform could lead to regime change. Vietnam is also seen as attractive because it's been able to carve out political independence. The U.S. used to be an enemy. Now it's an important export market, and that has given Vietnam leverage over China. And this is possibly attractive to Kim since North Korea is entirely dependent on Beijing. But of course, he won't be able to do what Vietnam did if North Korea remains wrapped in sanctions. And the Trump administration's offer on the table is, we will make you rich if you give up your nuclear weapons. And the question is, will this visit make him more willing to take that offer and the path of denuclearization? For Nightly Business Report, I'm Eunice Yoon in Hanoi.
Macy's is trimming its management ranks. That's where we begin tonight's Market Focus. The department store plans to eliminate 100 senior management jobs as part of a plan to save $100 million a year. Macy's reported better than expected earnings and revenue in the most recent quarter and said its plans to double down on its most popular merchandise like beauty and jewelry to help increase its profits. Despite offering a flat outlook, Macy's rose 1.5% to $24.72. Higher demand for its Dunkin' Donuts branded coffee helped J.M. Smucker beat quarterly earnings and revenue expectations. The packaged food maker also benefited from its purchase of the premium pet food company Ainsworth. The stock rose nearly 5% to $106.09. Tesla's CEO Elon Musk is in Twitter trouble with the SEC again. The agency has asked a judge to hold him in contempt of court after Musk tweeted about Tesla's projected vehicle production, saying the tweet violates a settlement that it reached with Musk after he tweeted about taking Tesla public last year. Separately, investors of the energy storage company Maxwell Technologies are reportedly suing to block Tesla's acquisition of the company. Tesla's shares were down a fraction today to $297.86. And a federal appeals court has cleared AT&T's $85 billion takeover of Time Warner. The ruling rejects the Justice Department's claims that the deal would reduce competition and raise prices for consumers. The DOJ has no plans to appeal further. AT&T was up slightly at 31.22. And WW, formerly Weight Watchers, issued full-year guidance that was below expectations after quarterly results missed estimates. The company said the year got off to a, quote, soft start, and its winter recruiting campaign didn't deliver as many new members as hoped. The disappointing guidance initially sent shares plummeting after hours. They closed the regular session up just a fraction at $29.57. Jeep, perhaps the hottest auto brand in the U.S., is gearing up for a major expansion. Fiat Chrysler says it will add nearly 6,500 jobs in new or expanded Jeep plants in the Detroit area, while announcing plans to lay off 1,300 workers in Illinois. Phil LeBeau has more on Jeep's shifting strategy.
Jeep, which once used the tagline, imported from Detroit, is now at the heart of a huge investment in the Motor City. Fiat Chrysler is pumping $4.5 billion into facilities in the Detroit area. That includes converting an old engine facility into a final assembly plant. Just last month, Fiat Chrysler CEO said the company needs room to build all new Wagoneer models.
Those two vehicles are going to need new capacity because there's no way we can fit it into our existing manufacturing infrastructure. So we will bring capacity on board for those, and as you know, the pent-up interest really in Grand Wagoneer is huge.
While Jeep is adding jobs in Michigan, it's laying off more than 1,300 workers in northern Illinois, cutting a shift at the plant that builds the Cherokee. Over the last decade, Jeep sales have exploded, now easily surpassing 1 million vehicles worldwide. fueled by spot-on styling and a growing love of SUVs thanks to relatively low gas prices. Still, the company knows gas prices can spike quickly, so the new production will include plug-in and fully electric Jeep models. To the Detroit area, adding thousands of jobs is a welcome shot in the arm.
This is a moment in our state where we've got some momentum here that we've got to keep our foot on the gas.
Lawmakers in Michigan now have 60 days to agree on requirements needed to lock in Jeep's expansion. That would secure the biggest auto investment in that state since the recession a decade ago. Phil LeBeau, Nightly Business Report, Chicago.
Coming up, the Brexit deadline is fast approaching, and that has some companies scrambling. Here's a look at what to watch for tomorrow. As we reported, the Fed Chairman Jerome Powell will be back on Capitol Hill for a second day of testimony on the economy. Retail earnings include Lowe's, Best Buy, and TJX companies. A House Congressional Committee will hold a hearing on U.S.-China trade, and Trade Representative Robert Lighthizer is expected to testify. And that's what to keep your eye on for Wednesday. Trade uncertainty is prompting American companies to pull back on their expansion plans into China. In a survey conducted by the American Chamber of Commerce in China, roughly 1/3 of respondents say they will not invest more in that country. That compares to about 1/4 of respondents last year. Their chief concern is U.S. tariffs on products exported from China, as well as rising costs and slower economic growth. And now to the United Kingdom, where the clock is ticking. Britain is scheduled to leave the European Union at the end of next month. And at this point, no one is quite sure how that will happen because no plan has been agreed upon. And as Willem Marks reports, that is creating a lot of headaches for one company in Southampton, England.
Prime Minister. Thank you, Mr. Speaker.
As Theresa May rises to her latest parliamentary challenge this week in Westminster, businesses across Britain battle a stubbornly uncertain Brexit future, with well-known names ready to run down their UK facilities or shift jobs overseas. US e-commerce firm PFS has chosen a different route.
What we see now is not the full picture.
That will not be all of it, no.
Lisa Cooley left Memphis, Tennessee late last year to open this new fulfillment centre in the English port city of Southampton. She's barely gotten her feet under the table, but Brexit's March 29th deadline is already demanding her attention.
It's a task trying to start something up in that span of time. And it's also a task trying to get inventory moved and imported here and set up. I believe it's a little chaotic in the beginning, but you know, at the end, our goal is to service our client.
Those clients are as global as their consumers, and her company employs thousands of workers worldwide. Until recently, PFS had only one major European warehouse, in Belgium. Just an hour outside Brussels, where Theresa May travelled again last week to try and salvage her divorce deal with the EU.
Are you expecting a breakthrough, Prime Minister?
Regardless of how well or badly Brexit negotiations go in the coming weeks, it's clear that many sectors seeking to do business here in Britain have already made significant changes. And this warehouse is one big example.
Logistics can be relentless, and firms like PFS can't wait on the politicians while they wrap, pack, and ship people's parcels.
There's timelines. It takes time to get equipment. It takes time to get your systems up and going. Of course, you have to go through the process of hiring employees, and you know, times I wouldn't necessarily say on the side of the retailers we service.
Brexit may have shattered British politics, But the economy has so far survived, with unemployment at its lowest level in generations.
In the long run, it's more the uncertainty of not knowing which direction you're going to proceed. I think that's the biggest concern and the biggest challenge here.
And as firms make preparations and banks book provisions, those Brexit concerns are now big enough to fill a building. Phil Marks, Southampton, England.
But it's not just small companies watching Brexit. So is Boeing. That company is shifting spare parts between its distribution centers in the UK and elsewhere in the world. According to Reuters, the global aerospace industry relies heavily on those distribution centers and an integrated supply chain. The Boeing official said the company is making sure it has parts where they're needed. And to read more about the business threat of a no-deal Brexit, you can always head to our website, nbr.com. Before we go, here's a look at the day's numbers on Wall Street. The Dow Jones Industrial Average was down 33 points, a very choppy trading session. 26,057 is where we finished. The Nasdaq fell 5, and the S&P 500 was off 2. And tomorrow, the Fed, trade, and earnings, and that summit will all be in focus. That is Nightly Business Report for tonight. I'm Sue Herrera. Thanks so much for joining us. Have a great evening, and we'll see you right here tomorrow.